Banks in India have remained relatively unaffected during the global recession. Despite the economy slowing down due to falling exports to the West, the financial sector is sound. No banks have collapsed here, and the country faces no financial or liquidity crisis, largely due to banking regulations which discourage reckless lending.
There is no crisis whatsoever in Indian context. Indian banks are well capitalized, much above 9% capital adequacy ratio, which under the regulatory norms they are required to have. So there is no problem of capital, there is no problem in the quality of assets, and there is no problem of growth as well.
Multinational banks too, such as HSBC, Citigroup and UBS, may have bled a lot of money in the West, but their advance tax payments in India, which have increased at least 90% on average, are a good indicator of how well their businesses are doing in the country. With 90 branches, Standard Chartered is the biggest foreign bank in India. It weathered the financial crisis better than most rivals thanks to its focus on Asia, and its net profits in India grew 12% in 2008.
India is the second largest contributor to its group profits. Probably I wouldn't know of any other multinational operations in India which contributes this significant a proportion to their worldwide revenues.
Meanwhile, the global loss of $18 billion by Swiss giant UBS last year doesn't seem to have stopped it from aggressively courting business in India. It has received a banking license from the central bank and is in the process of launching a retail branch. But its strength remains investment banking.
It's one of the few economies which even in a world like today is growing. The Indian domestic entrepreneurs are very aggressive. They're very keen to grow, expand, not just locally but globally. And that provides a unique opportunity to us international banks to help them in both raising equity capital for growth as well as looking at divestitures, acquisitions as the case may be. So it's one of the few markets where the fee pool is growing rapidly on the investment banking side, and is today in scale maybe the third or the fourth largest fee pool globally.
Lucrative investment banking fees in the country mean Morgan Stanley is also focusing on India. It has big private equity plans aiming to deploy a chunk of the $1.5 billion in its global private equity fund in the country. And according to the head of the Indian arm, the firm's $177 million worldwide loss last year is a thing of the past.
If you look at what has happened, post all of the losses that were announced, Morgan Stanley has come out stronger. So at the end of the day, the proof is in that fact that clients have seen a team that is more focused, they've seen a team that is united, and they've seen a team that is really chasing, working with them to chase opportunities.
Yet despite those opportunities, there is still a shift towards consolidation, especially in retail banking. Most foreign banks have scrapped their ambitious expansion plans for the Indian market and are trying to move away from offering riskier financial products.
There has been excessive push of unsecured products into the same segment that we are operating in by our competitors. And we believe at this point of time, till that does not stabilize into a disciplined kind of a lending practice, it's riskier to be pushing unsecured at this stage. So our shift is to slow down unsecured, which is personal loans. We continue to do the similar amount of credit cards we're doing earlier, and mortgages we are stepping up.
Yet the biggest challenge foreign banks face is more long-term. Market share for foreign banks is only 8%, and domestic banks are already very well established.
Ever since the birth of the new generation private sector banks in India, like ICICI Bank and HDFC and all, foreign banks can't offer anything new which this ICICI and HDFCs don't offer. So they have been looking for the India formula for the past few years, but I don't think they have come out with something dramatically new to the customers. Yes, you do it high end and get into wealth management, etc. But the Indian smart private sector banks have been doing the same thing.
We are an international bank with a footprint across 70 odd countries. There aren't too many Indian banks which have that kind of an international presence or a global network. It gives us an opportunity to bank and meet the global aspirations of the Indian clients.
For foreign banks to really make a mark on the market, they will need to rapidly scale up and broaden their customer base. Still, considering their performance back home, any business they can get at all in India will be welcome.